Hey everybody, it's Mark Yegge. Welcome back to the channel. And today I'm going to show you how I analyze a stock, but I'm going to do it with a stock that is right at the right spot on the chart. You know, I always talk about the four cornerstones in the cash flow machine. The right stock in the right market at the right spot on the chart, and then you squeeze the juice. Well, we just so happen to have like all four of those things working at the same time. Doesn't always happen. When it does, that's a probability in your favor kind of situation. So we want to take advantage of that. It's December 18th today. The market is still technically closed. We haven't opened yet. So I'm using closing prices from Friday night, but it doesn't matter. To me, this is the way I analyze a stock. So let's start with it. It's a company called Datadog. Weird name for a company, but whatever. They make software as a service. So they're cloud-based, and if you've been watching this channel for any period of time, you know that cloud-based stuff is hot and has been for a long time. But if you look at this chart, over the last couple of years, it hasn't performed hot, right? It's actually gone down quite a bit. Now, there was a period of time where things like CrowdStrike and some other software as a service cloud-based applications kind of declined after a big heat up, a couple of years ago. But still doesn't mean they're not growing, and I'll show you that in a second. So let's start with the fundamentals. I always start with fundamentals. To me, fundamentals are 80% of the game before you get into a stock and only 20% of the game after you get into a stock. So I really spend some time on fundamentals before getting into the stock, and I'm not in this stock. And by the way, this is for education and information and entertainment and fun. Do your own research. This is not recommendation advice, so don't be running off and buying stuff without doing your homework. So, but nonetheless, hopefully you'll learn something on this. That's the goal. And remember, we're going for income, but you always get to make better income when you have a stock that is moving in the right direction. So that's why we put so much focus on all four cornerstones: right stock, right market, right spot on the chart, squeeze the juice. Let's start with right stock. Well, I think this is the right stock, as you're going to see when I get into the technicals. But right now, let's take a look at the fundies. So the fundamentals are interesting. Let's start all the way over here on the left. You see I put these little red tick marks all over the place. So you're seeing earnings per share going from 48 cents to doubling to 98 cents to going up another, to going to $1.50 to going to $1.80 in this coming year, 2024. So that's pretty darn good growth, right? In fact, it's 114% blended average rate growth over that period of time. That's pretty doggone good. And so you see that where it says 114 there, right? All right, so that's your earnings growth, right? Then we go down, so you can look down at the earnings. Here's the quarterly earnings growth, quarter over quarter, 233%, 300%, 167%, 77%. Now you can see it's going from triple digits to double digits because the company's getting bigger, but those are still darn good numbers. There's no red numbers there at all. Going over to the other side, you're looking at the sales. Sales went up quarter for quarter, 84%, 83%, 74%. You see those numbers. Now they are coming down, but they're still a company that's growing 25% sales quarter over quarter. That's the kind of company I want to be in, because that's the kind of company that could become a super stock. And so that's where we're going for here. So there we got our earnings, we got our sales. Now let's go over to the right side. We see earnings per share growth again at 114, and we look at return on equity. That's 28%, discounted a little bit for this debt that we have here, 52%, but still probably fairly cheap debt depending on when they got it. But still, 28% is how well they're managing your money as a company, and they're doing 28%. That's really good. Up-down volume ratio. This is basically the supply and demand of the stock, and you're seeing it's right now 1.3. 1 is even. There's just as much supply as there is demand, but 1.3 means it's skewed toward the demand side, and so that's why the stock is going up. Okay, so that's a quick fundamental analysis. Now let's go over to the right side of the page over here. And by the way, this is Market Smith from Investors Business Daily. It's a great piece of software if you don't have it. But it's not cheap, but it's worth it if you need to screen stocks and do all kinds of stuff. There's tons of screeners out there, tons of charting packages out there. This is the one I happen to use. Now, you could see this is a big cup pattern, right? It goes all the way from here, all the way down to this top of this little red line that I drew there, right? That's the cup. And then it made a little, kind of a deep handle actually on the size of the cup. And you see that handle. Now that handle was sold off in fairly light volume, except for that big volume week where it had earnings, where it blew away earnings, but for some reason it went down a lot, so probably disappointed or whatever the reason is, right? More sellers than buyers. And then so you're seeing that's the handle, right? So we've got a handle that's kind of right there. See that handle? And then, I'll try to draw a cup here, but it's lines. It doesn't let me really draw, but you can see. Right. All right, so you see that cup, and then there's a handle. The top of the handle is where you want to buy. And so this is a sell-off on fairly light volume. Went down through the 200-day moving average, down through the 50, back up through the 50 and the 200 on the same week on earnings. Had a 96% earnings per share growth number, and that number was 173% of average volume. And so it blew up through those two moving averages to start a new trend up toward the top of the handle. And that's where it is right now. It wants to break out. It actually is breaking out at the top of this handle, which is the perfect time to be buying this, within about 5% of that handle. So we're looking at right around 120. The stock's at 122.60. So this is a stage one, which is an early stage base. You want to get in on the early stage of anything, right, when it's growing. And we got great earnings, great sales, right spot on the chart, and we have a green market, by the way, which is, the green market is great, but it's also a green market that's been green for more than a month, and generally they don't last that long, and I'm not talking about a secular bull market. I'm talking about a market that goes up and then goes down and then kind of goes up again and goes down and goes, they cycle. And usually these up cycles don't last, 6 weeks long without some kind of a little down cycle. So we're a bit long in the tooth on that, but we're green. So we got to play it as if it's green, because we'd rather be in on the green when it's early, but still, it's still green. And it could be green for a while based on what the Fed's doing. All right, you got that? Now, let's take a look at the options chain. All right, so here's the option chain, and I'm just going out a week, and it's 5 days. You can see it here. And the stock is at 122.71, so we're just going to go to the 123s. Everything's green, so we're just going to go a little bit out of the money. And that's paying about 2% for the week, right? So pretty cool if you can get 2% for the week. That's about 8% for the month if you can get it. Basically, to get it, the stock has to be above its strike price by the time it expires, which is this coming Friday. And so that is what we're after here. We're after a stock that's the right stock, which we talked about, the right market, it's green, the right spot on the chart where we found that little spot breaking out from a cup and handle pattern, and then we're squeezing the juice. We're getting 2% a week. So I don't know if the stock's going to go up or down. All I know is that now I'm trying to get this for cash flow. And let's say I had 1,000 shares. That's $2,000 a week. That's $8,000 a month. So that's how I look at it. There, you just went through a full analysis of how I do a stock, and you happen to be doing a stock that's timely. So study that, study what I did, see if that helps you. If it does help you, like, subscribe if you like what we're doing here, all that kind of stuff. Hit the notification bell so you see when these things come out, and you can take a look at them, before the market opens. It's a great time to look at it. And then, if you want to go a little bit further with me, if you want to go deeper, we do more than just like buy a stock and sell a call. We've got all kinds of strategies. We go really deep on covered calls. So love to be able to help you. If you're interested in that, go to the cash flow machine. Go to cashflowmachine.io. It's the website. You can stick a //cc info, covered call info on there. But anyway, there's a link at the bottom here that you should be able to click and go right to that page. And then you can find out a little bit more about what we do and how well we do and all that kind of stuff. Whatever you do, you need a freaking system, because if you don't have a system, you're just going to be guessing. We have a full system. You know that we're organized, right? Right stock, right market, right spot on the chart. And you've got to have some system that gets you confidence in these markets, because they're crazy, right? They're crazy, but there are ways to make money on them. Hope that helps you. See you on the next video. Take care. Hi, I'm Mark Yegge. Every new year brings hope, but have you ever made those resolutions and by February they're out the window? Yeah, me too. This coming January 13th and 14th, join me at Your Greatest Year. It's an online summit dedicated to setting you on a path to transformation, abundance, and growth. Make your resolutions a reality. Let's create magic together in 2024. Make 2024 your greatest year. To register, go to 2024yourgreatestyear.com. Hi, Mark Yegge here, wealth architect and author of this book on my covered call investing system called the Cash Flow Machine. Listen, what you just saw is just one part of creating reliable income of 2 to 4% a month from the stock market. But you know, if it were that easy, then everyone would do it, right? If you want to learn how I create investment income the right way, then you need to learn and have a system with rules and what-if strategies so that you can learn what I do when the market goes against me, what I do when the stock goes against me, how to adjust my trade so that it's always in a winning position, how much to risk, how to build a multi-million-dollar portfolio that creates income of $10,000, $20,000, or $30,000 a month in semi-passive income. And best of all, the whole cash flow machine system takes less than an hour a week to implement. Just go to cashflowmachine.io to learn more, or click this link for more videos, masterclasses, and free resources. See you there.